All right, what's up, guys? So today I am going to initiate coverage on PayPal stock. I did not upload last week because I recently updated my MacBook and my mic no longer connects with my MacBook for some reason. I tried recording with AirPods, but the mic quality was just god awful. So today I bought a pair of $8 earphones, and surprisingly, the mic quality on $8 earphones is much better than AirPods, and it's not even close. Anyway, PayPal stock. So I am going to start off with analyst coverage on PayPal stock. Then I will move into the charts. And finally, I will close things off with a research report done by a CFA senior equity analyst on PayPal stock. I will timestamp everything for your convenience. Anyways, without further ado, let's get started. So as you can see on screen, PayPal is getting destroyed on Wall Street. We aren't talking about no-name financial institutions. We are talking about the largest financial institutions in the world that are downgrading and officially giving up on PayPal stock. We are talking about Oppenheimer, Morgan Stanley, and Bank of America. I mean, Morgan Stanley reduced their price target on PayPal stock from $118 per share to $66 per share. Out of all the financial institutions on that list, the only one I really care about is Morgan Stanley, obviously. So if you check Morgan Stanley's past coverage on PayPal stock, it's quite funny. In 2022, PayPal was a top stock pick at Morgan Stanley. In 2023, Morgan Stanley doubled down on their bullish stance on PayPal stock by maintaining an overweight rating. And now fast forward to 2024, Morgan Stanley has given up and waved the white flag on PayPal stock. This is a classic example of buying high and selling low, because as you can see on the thumbnail of the 2022 video, investor sentiment was very high back in late 2021 and early 2022. As you can see on screen, SoFi stock was at $16 per share, up 17% on that day. And it's not even the large financial institutions that are giving up on PayPal stock. As you can see by the views, retail interest on PayPal stock is gone. The 2022 video got almost 60,000 views. The 2023 video was under 4,000 views, and the 2024 video was under 2,000 views. So the point I am getting at is that everyone, from institutional investors to retail investors, have given up on PayPal stock. And just on that fact alone, I am bullish on PayPal. I was always taught to be a contrarian by nature by my mentors. And when I take a look at Coinbase stock ratings, it's also funny how back in 2023, everyone from retail investors to institutional investors were so bearish on Coinbase stock back when we were buying in the $70 to $80 region. Now, fast forward to today, there are a lot of bullish analyst upgrades. I remember saying this in a Bitcoin episode back when Moody downgraded the United States credit rating outlook a few months ago. Just because someone puts on a suit and tie and has a good command of the English language does not mean you should listen to them. Because I remember saying the last time Moody downgraded the United States credit rating outlook, the S&P 500 went on a decade-long bull market. Fast forward to today, it's been 6 months since that Moody downgrade, and the S&P 500 over that time period is up over 25%. Putting that number into perspective, the S&P 500 usually generates an 8.5% return every year. So if you actually listen to these suits, you are an idiot, to be honest. I am not saying that you should listen to YouTubers. What I am saying is that nobody cares more about your money than you do. Do your own analysis, do your own research, and come to your own conclusions. What I can say with absolute certainty is that these suits do not have your best interests at heart. So finally, moving into the charts, keeping it short and simple, PayPal stock is inside another blue Fibonacci retracement support area that spans between $49.46 to $73.22. Anywhere inside the blue Fibonacci retracement support area is a good opportunity to buy the dip on PayPal. And as you can see with Mask, which is another cryptocurrency, if you had bought Mask after the first blue Fibonacci retracement support area shown in episode 1, you'd be up roughly 100% and counting. And if you bought the second blue Fibonacci retracement support area shown in episode 3, you'd be up roughly 50% and counting. I am not saying that these blue Fibonacci retracement support areas are always going to work, but investing and trading is about putting yourself in a position to win, and buying from support increases your chances of winning, in my opinion. So what I can also see is that a lot of people are starting to catch on to the importance of the 61.8% Fibonacci level, which is commonly known as the golden ratio. Because if we take a look at the volume profile on the left, we can see a huge spike on the volume profile as soon as PayPal stock hit the 61.8% Fibonacci retracement at $73.22. Now, let me show you why this level is so important. Now, I took off most of the levels on the chart as well as most of the indicators on the chart to illustrate this point more clearly. Because as you can see, before price hit the 61.8% Fibonacci retracement, PayPal stock was crashing impulsively to the downside. Now, once PayPal stock hit the 61.8% Fibonacci retracement at $73.22, price has now formed a bullish corrective reversal pattern known to some people as a falling wedge. And what I mean by corrective structure is that PayPal stock has a lot of overlapping price action after hitting the 61.8% Fibonacci retracement. Even though the overlapping price action is still to the downside, PayPal stock is not impulsively crashing to the downside like it was in 2022, meaning bearish momentum is declining. I believe all this price action under $73.22 is just a shakeout before a reversal to the upside occurs. So the next thing I want to discuss are moving averages. Now, textbooks will tell you that the 200 weekly moving average in red is the most important moving average, which is currently at $142, hence the thumbnail of this video. Now, the 50 weekly moving average in orange is also very important on the PayPal stock chart, because as you can see, the 50 weekly moving average in orange has been support and resistance several times throughout the chart's history. Now, last week, PayPal stock did close above the 50 weekly moving average in orange. So the fact that PayPal stock is trading inside the blue Fibonacci retracement support area, coupled with the fact that PayPal stock closed above the 50 weekly moving average in orange, which has been resistance recently, gives me further confidence in saying that PayPal stock is a buy today, not financial advice. Okay, so now that we have established that I expect a bullish reversal on PayPal stock, let's talk about potential price targets to the upside. So if you turn on the Lux Algo Fair Value Gap indicator on TradingView, there is a fair value gap between $129.42 to $152.08. On top of that, if you draw a Fibonacci retracement from the bull market top to what I perceive to be the bear market bottom, you get a resistance area that spans between $100 and $154. Also, note that the important 200 weekly moving average in red is at $142.72. So basically, there is a lot of confluence between the $140 and $150 region. My price target for PayPal stock spans between $100 and $150 per share. In other words, buying PayPal stock today at $64 per share can potentially yield a return that ranges from 58% to 141%. So this is the first asset that I've covered on this channel that I don't expect will hit a new all-time high anytime soon. Now, let me explain why I don't believe PayPal is going to be the next Meta stock. So the chart on the right is the Meta against S&P 500 valuation, and the chart on the left is the PayPal against S&P 500 valuation. Keeping it short and simple, the key difference between Meta and PayPal is that the Meta against S&P 500 valuation did not break the all-time low, whereas the PayPal against S&P 500 valuation did break the all-time low. In my opinion, the fact that the PayPal against S&P 500 valuation broke a new all-time low suggests to me that PayPal is not about to embark on a Wave 3 extension that takes PayPal to over $1,000 per share, as I have seen on several Elliott Wave channels in regards to PayPal stock. The reason for that is that if PayPal stock is going to thousands of dollars per share, that means that PayPal stock would outperform the S&P 500. And if PayPal stock were to outperform the S&P 500, the chart on the left would be hitting new all-time highs as well. There's absolutely nothing to indicate that the PayPal against S&P 500 valuation has formed a bear market low. What I see is a 5-wave impulse off the all-time high. Even if the chart on the left has a bounce, I don't think it's going to be a very significant rally that takes the chart to new all-time highs. So that really brings into question the long-term investment potential in PayPal stock. Because if the PayPal against S&P 500 valuation doesn't go to new all-time highs, what's the point of investing in PayPal? Because the purpose of stock picking is to pick stocks that outperform the S&P 500. The purpose of stock picking is to see a stock's S&P 500 valuation hit new all-time highs. Take a look at the chart on the right. The Meta against S&P 500 valuation is at a new all-time high, which means Meta is outperforming the S&P 500. If the PayPal against S&P 500 valuation is stuck in a perpetual downtrend and can't outperform the S&P 500, why invest in PayPal in the first place? That's really a question for the people who want to invest in PayPal for the long term. For me, PayPal stock is not a long-term investment. For me, PayPal stock is a swing trade back to fair value. So I just played that back and I sounded so bearish. I want to clarify something. The PayPal against S&P 500 valuation does have bullish divergence on the monthly time frame. So I definitely do expect a bounce. I just don't expect the PayPal against S&P 500 valuation to hit anywhere near all-time highs, which is basically a requirement for PayPal to hit over $1,000 per share. There is a possibility that the chart on the left could enter a Wyckoff accumulation phase, but currently there is no evidence of that. So as the weeks and months pass by, I will keep a close eye on the PayPal against S&P 500 valuation. Okay, so let's close things off with a research report done by Brett Horn, a senior equity analyst on PayPal stock. So the analyst notes, PayPal's fourth quarter results were solid overall, but the outlook management provided for 2024 suggests the road towards improving growth and profitability will be longer than expected. We expect to reduce our $135 per share fair value estimate by about 20% as we moderate our growth and margin assumptions. That said, we still believe the company's narrow moat and favorable secular tailwinds create an attractive long-term picture and see the shares as undervalued. Fourth quarter net revenue increased 9% year over year, with total payment volume up 13% on a constant currency basis. PayPal branded and Braintree volumes were up 5% and 29% respectively, with both rates declining slightly from last quarter. While active accounts remain stalled, we are encouraged by the ongoing uptick in transactions per account, which grew 14% year over year, or 7% excluding Braintree. While transaction margins fell year over year and transaction margin dollars were basically flat, they improved slightly sequentially. Adjusted operating margins improved to 23.3% from 22.9% last year due to a 9% decline in non-transaction expenses. Management's commentary implied that PayPal won't see a meaningful impact in either growth or margins this year. PayPal recently announced its intention to reduce its staff by 9% at the end of the year. Management intends to reinvest any savings into other areas to drive growth. We agree with prioritizing long-term growth over near-term margins, but this suggests reigniting growth may be more difficult than we previously thought. Comments from management also suggest the company is not expecting any improvement in top-line growth this year. We think management may be a little conservative in this regard, as they noted they are not factoring in any improvement from expected product rollouts this year until they see a material impact. Still, this suggests it will take longer than expected for better growth to materialize. In regards to business strategy and outlook, PayPal's development of a network of both merchants and consumers early in the evolution of e-commerce allowed the company to build and maintain an enviable competitive position. Historically, PayPal's growth had been driven by the ongoing shift towards electronic payments and the rise of e-commerce, which the coronavirus pandemic temporarily accelerated. However, the company is now seeing some headwinds in the near term as the positives from the pandemic reverse and new competition arises. I'm sure he's referring to Apple Pay, Google Pay, and Stripe. Management has attempted to combat the pressure on top-line growth with a greater focus on cost control, and we see this evolution as the right move. Longer term, we see a mix of competitive opportunities and threats that creates a fairly wide range of outcomes. PayPal remains a somewhat unique player with the payment space. We think this remains its key strength, but its position on both the merchant and consumer side could be challenged over the long run. Traditional point-of-sale acquirers are building out of their online capabilities, and in our view, it is notable that the commonality in the wave of M&A in 2019 was the combination of acquirer and issuer operations. This suggests to us that competitors are interested in replicating the PayPal model. Fintech innovation also appears to be concentrated in the e-commerce space, which has given rise to some new competitors. On the consumer side, services such as Apple Pay represent competition for PayPal. Competition on both sides could chip away at PayPal's position. On the other hand, PayPal remains a preferred partner in the online space. Its Braintree business is growing rapidly, and PayPal could build a growing presence in in-person transactions. In balance, we think the company can hold its own, but we recognize the potential to veer in either direction. An additional attraction is Venmo. Efforts to monetize the platform are still in early stages, and Venmo will likely not be a major driver anytime soon. While its long-term future is difficult to project, we believe it has the potential to create upside above our current fair value estimates. So the most interesting part of this research report is when Brett compares PayPal stock to its competitors, MasterCard, Visa, and Block. So starting with PayPal, his fair value estimate for PayPal stock is at $104 per share. His assessment on PayPal stock is that the stock is significantly undervalued, and he gives PayPal stock a 5-star rating. Moving over to MasterCard, Visa, and Block, he views all three stocks as being fairly valued, and he gives all three stocks a 3-star rating. So it seems to me, out of PayPal, MasterCard, Visa, and Block, Brett believes that PayPal stock offers the best upside out of all 4 stocks. So I'm not sure what happens. I just got blocked out of the research report, but I think I got the most important parts out of the way. If I can get access again, I'll upload the rest of it in future PayPal episodes. Anyway, that's my analysis on PayPal stock for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.